Today I want to talk about a couple of trades that I took this morning and show you how well this explosive bottoming pattern can work and not work sometimes. And the first thing I want to show you is XBIT because that made the biggest move today, and I think a lot of people are probably interested in this more than anything. But XBIT had a very strong bottoming pattern on a daily chart that you can't see here. This is a 5-minute chart over the past 2 days. But the entry point on this was a move above the prior day's high. And I was actually looking at a couple other trading setups that had a higher price that I generally trade, but a lot of times I'll watch these lower price stocks too because they aren't as reliable, but they often make big moves too. If they get out to a real strong start, I'll often jump in and try and ride them higher. But this is a really good daily chart on XBIT, very bullish pattern, bottoming pattern. It had a very wide window to the next level of resistance, and that's one of the great attractions of this trade. And I actually missed it at the open. I was watching a few other stocks, including Pandora and AMAG, which ended up doing well, and NLNK, which actually kind of died after hitting the entry point. So I didn't really get a chance to jump in on this. I was also watching a few other stocks too on other types of patterns. But anyway, so it hit the entry point, and a good entry on this would have been a break of that first 5-minute candle. What I like to do is just wait for the first strong 5-minute candle and then wait for a break of that first strong 5-minute candle out of that very strong, very bullish bottoming pattern. So we have to have a very strong daily chart first. And so if you would have done that, the entry point would have been about 473, 474. So I watched it. I saw it got off to a really strong start, and I saw a consolidation here at about 10 o'clock or so. And I knew that if it had, 4 or 5 candles of a sideways consolidation and it broke out with a lot of volume, then it would be a good secondary entry point. And sure enough, as it was consolidating here, it was reaching this 516 entry point, was breaking out, and the volume was really building at that point. And so it hung out around 516, 520 for a few minutes, and the volume really started to come in on the stock, and that's when I jumped in. And I knew that, with this kind of volume coming in, that there should be a full one-to-one projection of the first move up. And so I knew it would have a good chance anyways of reaching 570. And, after it broke out, it made a very strong first move. And then as it was breaking these 5-minute candles, it kept pulling back, and it looked like a red candle was developing. And so I got out with half at about a 4 to 5% profit. And then, with each 5-minute candle, though, as it closed, it would close real strongly. And a lot of shorts were being, I think, caught at that point, and the stock kept on going up. And I saw the resistance level much higher than where the price was. So I knew it had a good chance of going to, 570 to $6. 570 anyways. And I thought it would pull back, though, again and consolidate first before it made that next move higher. But, sure enough, it just kept going, and it hit the 570, 580 area. It actually hit 580 as I was about to execute the order, and I think I got out at 574. But, after that, it moved up to 584, and then it started consolidating and pulled back. And I thought we'd get another good entry point on this, but after 4 or 5 candles of a pullback, I want to see a strong 5-minute candle and then a break of that 5-minute candle. And I didn't really see that until this point here at about 11:50. But after 10:45, 11, at that point, I don't look for any more new entry points in general unless the market's really moving that day. And the stock's really moving too. But, that made a move of 10%, 15% within, I think it was 15 minutes. So that worked out really well. Now, the other one I was looking at today was NLNK. Actually, I'll show you another one that's more in my price range. Usually focus on more, but this AMAG had the same pattern, and you can see the 5-minute consolidation here. The prior day, when I say 5-minute consolidation, I mean on a 5-minute chart. You can see this really nice horizontal consolidation going into the entry point on the daily chart. Okay, and again, that first strong 5-minute candle followed by a breaking of that 5-minute candle usually gives you a really good risk-reward ratio on this trade. And after it hit that, after it pulled back here and made that first strong 5-minute candle, it had strong support. After it went into the top of the prior consolidation, it found strong support there and rebounded strongly in very strong volume. And the breaking of this 5-minute candle here was the entry point for me. And right after that, it made, I think, a 3% move or so, 3-4% move or so. So that worked out pretty well too. I think I got out with like a 2 or 3% profit on that. But the other one I want to show you was NLNK. This had the same pattern, and this looked really strong on a daily chart. And I actually jumped in a little early on this. I didn't wait for the strong 5-minute candle and the breaking of that candle. I just went ahead and jumped in at the break of the pre-market high, which was right here at 755. And sure enough, it hit that point and pulled back sharply. And after it came back about 2.5%, I decided to go ahead and cut that trade because it just didn't get off to the kind of start I like to see, especially on these stocks. So once I get below $20, I want to see a good start to these trades, and I won't give them too much room, maybe a couple percent, maybe 2-3%, and then I'll cut it. So that was a loss on that. And the other one I'm actually going to trade on right now is Pandora, and it had the same pattern. And on this one, I wanted to see a break of that pre-market high again, and didn't get it until later on in the morning. And so I went ahead and jumped in. It's still trying to break out here. It still may move a lot higher later on today. Right now, it's getting to lunch hour, and after 11 a.m., usually you don't see a big move generally after that point. But it still may move quite a bit higher from here. I think the next resistance is up near $8, so that may work out real well too. Yeah, and the other one I was looking at this morning was Oracle, and that one had a really big earnings beat, and I wanted to see a lower float on this. I wanted to see more volume on it. The overall long-term trend was good, but it just didn't really meet the criteria in the earnings eruption trading videos that I have on the site. And so I was really shied away from this, especially after I got off to a tough start this morning, and I skipped that. But I want to show you one more too that I did take. This was a really good earnings trade from yesterday. A lot of people missed this, I think, and didn't see this setting up. But this company had a really big earnings beat, and the long-term trend, over a year or 2 years, was not real strong on this one. But if you go back 5 years, you can see the series of higher highs and higher lows. So this company is, creating value over time. When it had a very strong earnings beat, it was going sideways in more of a neutral pattern, and that's okay. It was breaking that consolidation area. I'll bring back a 1-year chart up here. It was breaking the consolidation area up to 29.05, so it's breaking out of that range. I knew it had a chance to go up to this high up here with the kind of earnings beat it had. The earnings beat on the top line, the bottom line, and once it hit the entry point, from that point I want to see 3%. If I see a 3% gain from that point, I'll go ahead and take some off, which is what I did in this case. And one way to let this ride higher is just put it on a 5-minute chart first of all, and then as these pullbacks occur on a 5-minute chart, you want to raise a stop to the prior 5-minute chart low. So this low right here, and this consolidation through here, you can raise the stop to below here, let's say, and as it makes the stair-step pattern here, which is a good sign, you want to see that sort of slow, gradual uptrend without sharp pullbacks. Once you see sharp pullbacks, especially after 10:30, 11 o'clock, that's usually a good sign that it's going to at least consolidate for a while, and it might be a good time to just go ahead and pull a plug on the trade and take the rest of your profits. What I like to do on this to let this ride is just go ahead and drop a stop below the prior low on this 5-minute chart, raise that stop over time. If I get a 5 to 10 period consolidation here, then I'll drop the stop below the prior consolidation. And so as the stock is moving up through here, raise a stop to here. As it moves up to through here and breaks out, drop it below either prior consolidation or the one prior to that, and just keep doing that, raising that stop below the prior consolidation. And then what I like to do is go ahead and take the rest off after that break of the prior day's high the next day. So if the stop hasn't been hit at that point, I like to sell into this break of the prior day's high the next day after the earnings beat. That worked out really well. That was like a 10-15% trade on that in a price range where you can take a large position size. Okay, unlike with the $4 stocks, $5 stocks, those can move a long way a lot of times, but a lot of times they won't. A lot of times they'll pull back sharply. They have less reliability, and they have oftentimes a wide bid-ask spread. And so the reliability and the percentage of success with those price ranges is substantially lower than it is in these price ranges. So keep that in mind when you're trading, and realize that, above $20, between $20 and $40 to $60 or even higher, these patterns can work very, very well. And this particular pattern, this earnings eruption pattern is what I call it, that has a very, very high likelihood of success if the stock meets all the requirements in the trade and if it hits the entry point. I have an aggressive entry point that I talk about in the video course that I only use for stocks that have very strong characteristics, and all the important ones I talk about in the course. So if it has a real low float, if it has a lot of volume, if it is in the right price range, if it has a very strong pre-market pattern, if everything looks really, really good, then I'll go ahead and jump in at the open. But usually I'll wait for the other entry point I talk about in the course. And, this stock had just enough volume for me to take the trade, a little bit less than this, and I wouldn't have taken the trade. So I think it had 120,000 shares the first 5 minutes, which is pretty low. And the average volume per day over the past few months was like 400,000 shares. So that's on the low end of what I like to trade, but it still worked out really well. One of the keys to successful day trading, if you want to day trade, is to find a very good pattern on a daily chart. Okay, and that's one of the things we do on the site is get a list of the best patterns, best consolidation patterns, continuation patterns, and also the best bottoming patterns, like we had with Pandora today, and with XBIT, and with NLNK. I think it's NLNK Genetics. Once you have that very strong pattern on a daily chart, then look for those good day trading entry points, and you'll find that you'll have a higher percentage of wins, and you'll often have bigger moves too. On the site we have a 3-week free trial. So if you get over to the site and just plug in your name and your email address, there's no credit card required for that trial, and we'll give you 3 full weeks of really good daily chart patterns, mostly consolidation patterns on top growth stocks and stocks beating estimates with rising future expectations. We also mention these bottoming patterns and also the earnings eruptions patterns that set up the night before. That's a great start if you're a day trader or a swing trader to, make more money in the market. And that earnings eruptions trade has been more than 90% reliable over the past few months if the stock meets all the criteria in the course. Strong pattern. It generally goes up anywhere from 3% to 10% or more from the ideal entry point talked about in the course within a day or two. That's standard, and it's a very, very good trading setup. So if you go to the products tab on our site, you'll see towards the bottom there that course that explains the pattern in detail and all the key characteristics that need to be present to have that higher reliability and to have a higher chance of it making a big move. So you definitely want to check that out. And to learn the bottoming technique that we used on XBIT today to make that 10% within 15 minutes, you can check out the bottoming course also on the site. And we also have a book that we sell on the site that goes over how to trade consolidation patterns and breakouts from those consolidation patterns on top growth stocks and stocks beating estimates, rising future expectations. So we generally only trade stocks with rapidly improving fundamentals. You know, those bottoming trades I showed you on Pandora and XBIT may have been an exception to that case. But in general, you want to stick with the best earnings beats, the best stocks in terms of rising future expectations, and top growth stocks for stocks above $20 especially. And those are a lot safer stocks to trade, and they're more reliable in my experience. And you know, if you get a big earnings beat on those stocks, they tend to make a really big move if they hit the right entry point that we talk about in our course, and also they tend to hold those values a lot better than other stocks in the market and other trades. You can check it out if you want to, and I'll talk to you in the next video.